Hello everyone and welcome to a brand new edition of Desk Traders Classroom. Please excuse me for my throat; it is gone bad right now. So I was down with fever for last 2 or 3 days, so I have a bad throat. Uh, Today we're gonna discuss a very important, feature or very important, setup in RSI that gives us a good chance to enter a stock when it is still going under accumulation or when it is still ready for a big move. Now that concept is called the range shift concept. Now we can really, if you apply the range shift concept with all the things that we have learned till now, the SMA3, the positive reversals and the moving averages, if you mix all these things with this range shift concept, you'll get a good result whenever you will trade with RSI. So first, let us see what the range shift is actually all about. Just a little disclaimer, just go through it and let's move ahead. So basically, this range shift was developed by Mr. Cardwell. That's some 35 years ago. Now it's more than 40 years ago. Mr. Cardwell has developed this range shift. What he noticed was basically a security or a stock or a commodity, anything has different characters when it was in a bull phase or in a bear phase. Means it's very much natural when you will witness a stock that is in a bull phase, it will behave in a different way, and when it is in a bear phase, it will behave in a different way. So RSI also will behave in a different way when a stock is in a bull trend or when a stock is in a bear trend. So normal range, whenever you will refer any books or whenever you will go through any books or material, you will find that normal range of RSI is 70 and 30. That is, RSI normally oscillates between 70 and 30, but there is a shift in this character, okay, when the market changes character. Now this range of 70-30 generally does not obey the the oversold and overbought levels when market changes character. That means when when the market is in a bull trend, this 70-30 won't work, or when the market is in an extreme bear trend, the 70-30 won't work. So he recognized a different type of levels, right? So public range, what he called it as a public range, that means every public follow it. This is generally people follow 70-30. He noticed, basically Mr. Cardwell noticed that during the bull trend, the oversold levels are 40 levels. That means when the RSI moves to 40 levels, it becomes oversold. So to become oversold, it does not need to go to the 30 levels or beyond it, right? So the 40 levels in the bull trend, near the 40 levels, not 40 is not an absolute value. Near the 40 level, the it is an oversold area, and 80 levels are the overbought area. Overbought means the trend is overextended in a direction, and a correction may start to you know uh, to follow anytime. So 80-40 range is the bull range. So right now we are in a bullish market, right? If you have seen the the price condition in last past 15 days, that this has been a mad run in the stocks, in everything. So this is a bullish market, right? Bank Nifty is at all time high, and Nifty is following to ready to go to the all time highs. Actually, many stocks have started to move like anything mad. Everything is rocketing right now. So you will see that 80 levels and 40 levels are working right now. So in the past 2 or 3 days, you must have seen that Bank Nifty and Nifty levels were above 80. Most of the banking stocks went above 80. So they cooled down in last 2 or 3 days, and then they were again resuming the trend. So 80 and 40 levels were working in the bullish market. Similarly, in the bearish market, when you will see only 60 and 20 levels work. When the stock 60 and 20 levels. So you have to plot 60 20. Don't have to plot. Basically, it's already plotted. So what happens when the stock is in a bear market? Whenever RSI will reach 60 and the stock is in the bear market, it is expected to face a resistance there. So basically, oversold levels are 60 levels in a bear market, and 20 levels are, oh sorry, overbought levels are 60 levels in the bear market, and 20 levels becomes the oversold in the bear market. So basically you have to understand this thing, that when the security is in a bull market, 80 becomes overbought levels, that means trend gets overextended, and 40 becomes the oversold levels. That means if the prices are coming here near 40 and they are making a bullish formation, that means the trend may resume on the upside. Similarly, in the bear market, whenever RSI reaches 60, you must presume that it has reached its overbought area and correction may resume, or whenever it reaches 20, you may presume that it is becoming oversold and there may be some upside move. So this is the character you must understand. We'll look everything at chart, and we also see some of the stocks that are near the good support on the 40 levels, and you will see how this thing works. So basically on the wider range, 80 and 20 levels are becoming the oversold and overbought levels. So you can find 80 from here and 20 from here, so on the wider range. Right now let's look everything. So this is basically RSI, what it will look like. The A zone is the RSI setting for a bull market. So 80 is the overbought area and 40 is the oversold area. And on the B zone, this is again the bear range, what we call. 60 becomes the overbought area, and 20 becomes the oversold area, right? So let us move ahead. Now you will see this is the, these are basically old charts, but we'll just see everything on the latest chart and current chart also. So you will see basically at this point A, the RSI comes and takes supports at 40. Now it is no more going below 40, right? So it took support here at 40, and now at the point A it took support at the 40 level. Now it is no more going below 40. Now this thing becomes a good support area, right? So, and this thing tells you that the stock may be ready to move up. Now it is no more going down. The stock did rallied from here, and then there was a correction. Now you can see these two lines are 60-40. Okay, I have just marked the lines as 60-40. The above line is 60, and then the line below it is the 40. Okay, now you will see that it has passed the 60 area. It has gone towards 70-80 zones, right? There is a small correction here, and it comes and again takes support near 40. Now this is the thing, what bull market is all about. 40 becomes the oversold zone. It comes and takes near the support at 40, then starts moving up. We are confirmed by the price action, and then again we get this type of rally. Now again it moves above the 60-70 zone, and it comes and takes support on the 60 levels. Now it can take support on the 40 levels also, and it can take support on the 60 levels also. So this is a very strong indication. In a strong uptrend, the stock will take support on the 60 levels, right? Also, so you can go and check out many charts right now. They are taking support at the 60 levels as well. So whenever we'll think that yes, the chart is taking support at the 60 level, that means it very overextended. No, it's not overextended. It is telling you that it is oversold. Now we'll in the coming sessions we'll look at one of the very high probability trading setups on RSI, and this 60-40 thing is very important. So I'm just explaining you this range rules before we can go into that setup. And I can tell you that if you trade only that setup, using your price action thing, using your RSI thing, and using your moving average thing, or any other thing, if you trade only that setup, that will be enough for you to earn a decent amount of money from the markets. Two things we will basically be very much focusing on. First is that 5-star setup that I'll explain you in the coming sessions, and second is trading the divergence. Now if you can mix both of this, you won't require anything else in your life to trade in any stock market. I can promise you that, because I myself use only these two things: the 5-star trade setup of the RSI and how to trade the divergence. I only use these two things and nothing else. Right? All my trades are based on these things only. So Basically, again on the on the D position, you will see it again took support on the 40 levels and started to move up. Now, when it went to the E thing, point E, it is unable to move above 60. So what we have discussed, 60 is then overbought area in the bear market, and generally stocks will face resistance at 60 RSI. So this is what happened here. Again on the F, it is so weak that it is unable to move to the 60 area. Now just correlate the points with on the charts. You'll just get a fair idea what I am talking about. Again on the point G and point H. Now just see the transition from the bear phase to bull phase, right? Bull phase to bear phase. On the bull range, we were taking support at 60, at 60, at 40, and we were moving around to 70 and 80 zones. And when we came to the bear range, it is not able to cross the 60 levels. You see how it is not able to cross the 60 levels. So this is what a full range rule is all about, and the shift from bear market to bull market is called a range shift, right? So this is what range shift is all about. As you look into the charts, go and look hundred of thousands. Now this is the way to really trade, and this is the way to really learn what I am explaining here. I'll show you on 2 or 3 charts and 4 charts, but what you have to do, you have to go and look the same thing on maybe 100 or 200 charts. You have to practice this range shift on 200 300 charts every day. Then only you will be able to be, be really grasp the matter, and you will be really comfortable with what I am telling you, right? It's not that, don't believe me, as I say every time, don't believe me. What I am explaining you, just go and watch it on the charts. Then only everything will become clear cut. Now again, if you can look at the crude oil, these are the old charts basically, and we'll just discuss everything on the new charts also. So you can see how it is taking resistance as, now see, this is a resistance as 40. Resistance as 40 means, see what happened when it took resistance at 40. This means super bearish, right? It is a very bearish signal. Resistance as 40. Now see again resistance at 60. So it tried to go up here and came down again, took resistance at 60, and then this thing happened. Okay. Now if you look at the current chart of crude oil, you will see almost this type of feature. Almost this type of, and this is the chart from 2014. This is the old chart, as I told you. But you will, if you go and look at the crude oil chart right now, you will see this type of formation forming. Now this is what stock market is all about. History repeats itself. This is Oro Pharma daily, and you can see how the points A, B, and C became a launch pad for the biggest move in Oro Pharma. Now it's taking support at 60, it's taking support at 50, it's taking support at 60, right? So this is type, the thing. And when you will mix it with everything I have taught you right now in the traders classroom, you will find yourself way ahead of any big analyst you are following. This is weekly chart. My intention is just to tell you that it works on every time frame. It works on weekly, it works on daily, it works on hourly, it works on monthly. Just notice the chart for some time and you will understand what I meant to say. See the transition from the bullish phase to the bearish phase. Now this is the transition. This is of course from this level. This is the monthly chart. Now how to trade range shift? Basically this is the question. So what we'll do, we have to spot the range shift on the chart. Range shift means the prices, if they were in the bear trend, right? So they were in the bear trend, they take resistance at 60, and it is expected to go to the 20 levels, but it does not go to the 20 levels and come and take support at the 40. Alright, so this is the basically a range shift spotting type of thing, or basically it moves little bit above 60, comes and again takes support at the 40 levels. So this is also called a type of range shift. Means that it is holding the 40 levels basically in a bear market. And bear market means immature bull market. The bull market is really going to get ready from here. And similarly, when we are looking at the bearish range shift, it will be basically the RSI is traveling around the 60, 40 levels, 80 levels, and then suddenly it comes and takes support, take the resistance at 60 levels. Is it unable to cross the 60 levels? It breaks below the 40 levels and then again come and take resistance somewhere near the 60 level. So this is the bearish range shift. We'll look everything on the charts right now, and just refer to the previous chart. Go and practice it on your own charts, otherwise it won't be possible. I'm telling you again and again. So when we spot the range shift on the chart, it gives us the direction to trade. We'll spot the entry, take the trade when the entry is confirmed, and if the move continues to pass the second range means first range is 60, second range is 40 for a bull market, and for the bear market it is just the reverse. It is the confirmation of the directional change. Also watch for the neutral zone. Neutral zone means the 50 levels for support and resistance. So basically what I meant to say, if you look at this chart, you will see there was a bearish move and the RSI was going below 20 and everything else. Now it came and took support on 40 here, right? So it gives us an entry point here because it took a support on 40. So you can just draw a line here, trend line, or any moving average you are following, and when this moving average is breached, you can plan a long entry. And now as it moves up, we have to wait as it comes to the 60 levels. Now what I have explained, that during the bear markets, now this was the bear market, during the bear market 60 will be a resistance zone, or it will be an overbought zone. Now when it comes near 60, we have to make sure that it does not take resistance at 60. Somehow if it takes resistance at 60, we have to exit this thing, right? But if it get past 60 levels, that means that a new bull trend may be emerging. So this was what happens. It doesn't take resistance at 60 and it moves past the 60 levels, and so we got a very good trade on the upside. So this is the basically the way of trading the range shift. As I told you, watch these levels for resistance. So we had to watch, as when it took support at the 40 levels, we have to watch this stock for resistance. I'll explain you one method where you can really filter stocks using range shifts. Is what? Look for range shift on the weekly charts. Weekly charts. Look for RSI at 40 levels curling up. Look for RSI at the 60 levels, that is curling down. Filter these things. Filter these charts and start to then switch on to the daily charts and then start analysis on the daily chart, right? Normal analysis. To filter stocks to trade range shift is go to the weekly chart first. Now I like when I like range shift on weekly chart, I like range shift on monthly chart. If you are having a perspective, investment perspective, right? If you are having a perspective to invest in a stock and carry it for like 2, 3, 4 months, right? So best thing is to go and look for range shift on the monthly charts and see how the range is behaving that. So when you find a stock taking support at the 40 on the monthly charts, and when you see there is a bullish candle also on the monthly chart, this is the very wonderful type of setup to go long in that stock, whatever the stock may be, right? If you want to check the fundamental, then again go to the fundamental thing and check the fundamental of the stock, and if you find this type of setup, go long in that. Now switch to the weekly chart and switch to the daily chart and put your analysis there. Now this type of, I can assure you that if you go long in 10 stocks in that way, 7 of them will be giving you very good returns. on the monthly charts. Go and look for the range shift on the monthly charts and then trade it. Now, what I am telling you, just go and apply it on your daily trading type of thing, right? Because if you won't apply, you pay anything, right? This is 15,000 for 3 months, nothing. People are charging 1 lakh, 2 lakh, and even 7 to 8 lakhs to teach you this thing. But what happens? You pay 1 lakh, you pay 7 lakh, you pay 15,000, doesn't matter. But if you don't practice, everything what you have paid is wasted. So what I am telling you, keep noting it and just go and try it. That's more important. So this was the bank nifty thing. Now if you can see that there was a good bull trend here, and somehow it came at the zero and took resistance. So where we can trade range shift here, it's basically at point 1 you will see there was a double top, it was unable to cross this thing. So this was a good indication for us to go short here. Again it came up and it is unable to break the 60 levels right now. Here it was also unable to break the 60 levels. So at point 1 it was a confirmation for us that this thing is going down, because it is unable to go to the 60 levels. And if it would have created crossed the 60 levels, we would have exited here. But it held the 60 levels, they didn't cross it. That means this bullish trend that was emerging beforehand has dampened its effect, and now it's going to correct. Now again this came down. Now it takes resistance at the 40 levels. Now this is even more bearish, and if you see what type of move you get when you take resistance at the 40 level, and just cross check it when you get support at the 60 level, what happens. So again came up and it tried to cross the 60 level again on the 0.4, but it was unable to do it. Just have a look at. And then again it went down. So you can see how the 60 levels are acting as a resistance. Again on 0.5 it came up, tried to cross the 60 levels, was unable. Again on 0.6 it was unable to cross the 60 levels. And on 0.7 and 8 you see it is taking resistance at the 40 levels. Now this is a very fabulous thing. I just love this thing. Now see, whenever it takes resistance at the extremes, see the move that it gives. Similarly, you go and check it with the bull market. When any stock is coming and taking support at the 60 levels in the bull market, the move you are going to see will be very fabulous if it holds. So this is the thing that people miss out generally. They say that I thought it's below 20, right? It's below 30. About oversold. Market will bounce back. Oversold means many people are selling. So this is a current chart. Now let's discuss. Now all the auto stocks basically are showing range shifts right now. That is the current chart, and this is the M&M future. Now if you'll see that here, it came up, it crossed 60 here. Now it came down, and it has started to curl up from here. Now we have to see whether it holds 40 or not. Now if you see, the 45 MA is also at 40 levels. Now this 40 levels become a very good support level, and there is a positive reversal as well in this stock. The RSI MA3 is holding the 20 levels, right? So this need to be watched by us. Now just try to see if it carries or closes above this thing. Now then it is going to give a good move to at least 719 levels. There is a 100 SMA, and then 806 levels. So first we have to see how it does here. If it goes and breaches up, then it is going to give a good move. So M&M is a good stock to trade, good stock to watch basically, not to trade, right? Because trading is at your decision. Good stock to watch. Just keep watching. Don't jump into the trades right now. Keep watching, keep learning. That is the goal. And after 3 months, right, you have the material. You will just go back to the material, keep revising them to become a trader. Basically, what I have understood and what my experience is all about, right? No one can become a trader in 3 months, 6 months, or even 1 year. It needs, a huge practice. A huge practice means I cannot tell you the amount of practice that it is needed to really earn from stock market. Right? It's not a very easy deal. You're not buying a money vending machine. It's very, very, very tough job. Now, and you will see many misleading people telling you that anyone can trade, or it's very tough job. I have faced the difficulty. You know, I woke up in the morning 3 o'clock, 4 o'clock, and then I used to practice it till 10 a.m., 12 a.m., 10 a.m. in the morning. 4 to 5 hours of practice every day in the morning when nobody was there. I was with me, fully alone. Everybody was sleeping, and I was sitting here and practicing this thing. And then I used to go to the office after 10 a.m. And then again used to come at 8:30. Then again I used to sit with this thing. I was taking weekend classes with Andrew sir, right? So, and I have spent lots of money. I have learned from every damn teacher you can talk about. You can talk about One Thrap. You can talk about Steve Nisson. You can talk about who else? Jeffrey Kennedy. You can talk about Andrew Cardwell. Every big name you talk in the industry, I have learned from them, and learned from them personally. Not taking this corrupted DVDs and everything like that. No, I have learned from them personally, and I've learned and found some people very a type of cheaters. I have attended many trading sessions and many trading workshops in India. I used to go to Mumbai, I used to go to Delhi, and everywhere. Whenever I used to hear that there is this workshop and this guy is coming, I used to go there, learn from them what they are teaching and how they are working. So basically, this is the way I have learned, and I have spent huge amount of money. If you just can't imagine the amount of money that I have spent after learning technical analysis, and then you have to spend the money to learn trading. You lose there also. So basically, my intention is to shorten this learning curve for you and bring you the best setups that you can trade. But again, practice is what you have to do. I cannot come and practice for you, right? So this is the way. So this is M&M, and you have to just watch it. Now again, Tata Motors, if you can see this, it went to the 70 levels here, and again came back. Now it's taking support at the 40 levels. Now this is what I was looking at some charts, and the auto stocks, if you have seen, they are lagging the main index right now. But I think that if a rally occurs in this Nifty, again, if a big rally occurs, auto stocks will be the one of the stocks that may be leading the index. So this is again taking support at the 20 levels. It is right now at 18, but again, if it moves up from here, so this will be a good bullish indication for us. And if you can see the candle, these are very candles that are showing non-interest. Basically, no one is selling, and there is a good Fibonacci support also. So you have to just keep watching it for this 214 thing, and if it crosses the 214 thing, then it is going very, very high. So just keep watching this stock also. It's a good one to trade. We have seen Tata. Now this is Bajaj Auto. Bajaj Auto is already in the bullish thing, right? Now this is a surge move that we have talked about in our traders classroom. Just go and have a look at the previous video, and then it never looked back. Basically, now it is come down to this thing, and it's taking support at the 45 MA of the RSI. Now we have to look. This was a hammer yesterday that was made, and it's quite can see that it is also a change of polarity type of support here. Just excuse me for the drawing, right? So it can generally continue its move up from here. Just keep these three things in your watch. Go and, if you are following the cash market, go and see other stocks in the cash market, how they are behaving. And this month maybe In the coming week, we will have this live session and we'll discuss your doubts there, discuss charts that you want to see, and we'll see how we can pan out that. So this was it, guys, for today, and just go and keep practicing. That is more important than anything else. And keep earning, keep learning, and trade well. Bye bye.